So today the topic came to me about down payment assistance, and you guys know why I'm doing these videos is to provide you guys with the information that you need so that you guys can make the best decision for yourselves. And so as the topics come in, I'm gonna make a video about it. It's counterproductive a little bit when I just make up my own topics. But today's topic was about down payment assistance. And so this video, I'm gonna try to get out as much info as I can about down payment assistance so that you guys can see if it's for you or not. Now, I'm not completely against down payment assistance, but I am all for a better route. I'm okay with traveling, but if, I had to travel somewhere, I don't want to walk. If I can go there on a bicycle or on a car, even better. But to me, down payment assistance, if you're trying to purchase a property with down payment assistance because you need it, there's probably some things you need to get in line first before you think about purchasing real estate, even if you're going to live in it. And I say that with love. I say that with love. If you need down payment assistance because you don't have some cash saved, get your finances in order. And there's tons of ways to do that. If you're self-employed, get your business to a point where you have some savings. Keep on investing in yourself before you buy a piece of real estate, because you have your closing costs. Even if you have down payment assistance, it's not going to cover absolutely everything on the transaction. You're going to probably spend a couple $1,000s, and that can be anywhere from $5,000 or up, right? Especially if you don't have any like gift funds or anything like that. If you have no savings and you're self-employed, get your business to a point where it's cash flowing. Keep on, every time you make a sale or do a service or whatever it is, put that back into your business so that your business can grow, because essentially that business is going to be the backbone of all of your personal debts, your mortgage, your car, whatever it is. Your business needs to be cash flowing. If you're climbing the corporate ladder and you're thinking about purchasing a home, get to a point where you've climbed that ladder, because you're gonna need, again, it's the backbone of all of your personal debts, everything that you gotta pay, your lifestyle, no matter what it is. It's all going to be off the backbone of your corporate ladder structure. And so you wanna make sure that those things are on point before you get into real estate. That's my personal belief. Now, if you absolutely have to purchase for whatever reason, I recently did one. Again, I'm not completely against down payment assistance. Recently just did a deal where a family, they had some savings. They're pretty decent on savings. They weren't, on their last dollar check to check or anything like that. They had a 401k. They were doing pretty decent. But their landlord was basically that's how it is here in Florida. Their landlord was giving them about 3 weeks to move out, which was odd because they had a good relationship with their landlord. That's besides the point. So they had 3 weeks. Typically, a real estate transaction closes in about 4 weeks. Typically, depending on how clean the file is, it can close in within 7 days. But typically, you need about 4 weeks. So these people got a house hunt and get their financing closed within 3 weeks. Long story short, it was better for them to purchase, and they needed down payment assistance. They were short a few thousand. So the down payment assistance helped, and the outcome of them owning the real estate was better than them renting, because the rent around the Miami area is typically higher than a mortgage, depending on where you want to rent. So we made it happen. I'm not completely against it at all. So there's a few things with down payment assistance that maybe you should know. So, as they say, there's no such thing as a free lunch. And I say that term, or I say that quote, I didn't make it up. I just sometimes like how it sounds. But there's no such thing as a free lunch. So something's got to give when it comes to this down payment assistance on some end. Because banks, never forget this, banks love to lend to people who don't need the financing. They don't like to lend to people who need the financing. If you look like you need this, they're probably not, you look real risky to them. But if you don't need it, man, they're willing to give you some financing for whatever you need. And that's on the business side, that's on the real estate side. But just keep that in mind. When you come in with down payment assistance, automatically you look riskier. That's just how they look at it. It's not how I look at it. That's how they look at it. They're the ones lending the money. I'm just the broker in between who's connecting you to the lender and sending your file through underwriting and making sure you get approved. But the actual financial institutions look at you more risky if you're coming in with down payment assistance. So what happens? You're like, all right, who cares? As long as you can get me close. One thing you should know is that if you look more risky, your interest rate is higher than usual. It's higher than someone who would have everything as equal as you. If you have the same credit score, same income, same job history, work history, same moving history, same inquiries on your credit report, if everything was the same, except you were coming in with down payment assistance, and you're using down payment assistance, your interest rate is going to be higher, typically. And this is because risk is associated with your interest rate. So the reason why people have different interest rates is because of who's more riskier than the other. Now, again, if you come in with down payment assistance, you are going to look a little bit more risky, so your interest rate is typically sometimes going to be higher than somebody who's not using down payment assistance. What else about down payment assistance? The term itself, down payment assistance, can be a little tricky. It's crafty in a sense. The reason why I say that is because sometimes, most of the time, it comes as assistance, but it's really a silent second mortgage. That's the actual term for it. Down payment assistance most of the time comes as a silent second mortgage. They also have grants that you don't have to pay back, but most of the time they come as silent seconds. For example, the Florida Hometown Heroes program that everyone's talking about, it gives you up to 5% help in closing cost assistance, not exceeding $35,000. And they just opened it up to any occupation, which is another topic we're going to talk about. Every down payment assistance and grant program has its own little quirks that you got to make sure you fit into those boxes. But that one that's really famous comes as a silent second mortgage, as majority of them do. What does that mean? You don't make monthly payments on the assistance that they're giving you. It's a second mortgage on your house. So you have your first mortgage that you're applying for that funds the deal. And then you have your silent second mortgage, which is another lien on your home that's helping you with the closing costs on your first purchase. And on a monthly basis, you're not paying that off. But it is due in full whenever you refinance. So if you're trying to take advantage of better rates later, then it's due in full. You have to pay that either out of pocket or through your equity. Hopefully you built up enough equity and the numbers make sense. If you ever decide to sell, you sell your property, that has to be paid back. So on top of your real estate commissions, on top of getting your tax prorations in order, whatever closing costs that you typically have as a seller, you also have to pay back that assistance. Also, if you move, in this case for Florida Hometown Heroes program, if you simply just like, all right, I'm gonna buy another property and move, or hey, I'm moving to another city, I'm gonna rent out my property, they get a whiff of that, you're gonna get a call or a letter or something that's gonna say, hey, we noticed that your new primary residence of where you're living at is different from when you use the down payment assistance. So we need you to pay in full the assistance that we gave you, whether it was $10,000, $15,000, $35,000, whatever it is. If you move and they find out, they're going to ask you to pay it back. So those are things that you got to keep in mind. My biggest one personally is when it comes to down payment assistance, for example, on this one, is if you want to refinance, because a big part of what I do is I like to help you manage that mortgage so that you can create more wealth into the future by real estate. And when you use a program like the one I just mentioned, a down payment assistance, a silent second mortgage, let me give you a scenario. Right now we're in a high interest rate environment. Rates are in the 6s and the 7s for primary homes, FHA conventional. And let's say you purchase at a 7% interest rate. And in your 4th month of home ownership or your 6th month of home ownership, interest rates drop. Interest rates drop, you turn on the news, interest rates are lower now. Now you can take advantage of a better interest rate. And you're like, all right, I'm gonna do that. Let's rock and roll. Let's get a new interest rate. So you go to speak to your mortgage loan officer, whoever it is, and you say, hey, I want to see what interest rate I can get. They pull your credit, all that good stuff. They're going to tell you, hey, there's a second lien title, solve a second lien on your property, which is that down payment assistance. In order for me to get you into this 4% interest rate, I need you to pay that off. How do you want to pay it? You just closed on your property, so there's not too much equity. How are we going to do this? And now you have to pay this thing back. So it's harder to manage your mortgage. So you'll probably have to most likely stay with the interest rate you have until you can pay that assistance back off. So that's my biggest thing. Just one second. So that's just something you need to know. Another thing about down payment assistance, as they call it, they also have grants. You have your silent second mortgages, then you have grants. Grants that you just don't have to pay back. You get it if you live in the house within about 3 to 7 years. All programs are different. Then it's 100% forgivable. If you are looking for down payment assistance, look for one that's 100% forgivable. If you have a loan officer who's telling you to use a down payment assistance program, ask them if it's 100% forgivable, and most likely the terms are like if you live in it within 5 years or whatever it is, then it's forgivable. Those also come with its own little things that you have to abide by in order to get. So every down payment assistance program, whether it's 100% forgivable or whether it's a silent second mortgage, they come with their own little buckets, so to speak, where you have to fit in order to get it. This is on top of the guidelines already set forth if you want a first-time buyer program like an FHA loan or a conventional loan or a VA loan. Those already have their own guidelines. So once you include a down payment assistance program, then more guidelines come about. So that's something to also keep in mind, which is very important. So let's say, for example, you're applying for an FHA loan and you're using a certain grant program. FHA only wants a 2-year work history, but the grant program wants a 4-year work history. So now you have to also meet the grant program's guideline. Sometimes that surprises people who aren't working with a well-vetted loan officer. You've already paid for an appraisal and inspection on your property, you're excited, and now you can't meet the guideline for this grant or this silent second mortgage or this assistance. So that's something to keep in mind as well. Whenever you're using a grant or a down payment assistance program, it comes with their own guidelines. What else do I want to touch topics on when it comes to down payment assistance? Quote unquote assistance. When it comes to down payment assistance, it typically also takes a little longer to close. That's another thing. So if you're not using down payment assistance and you have, let's say, an average file, it's not really cookie cutter where it's going to close in a week or something like that. It's just your regular file where they got to reach out to your employer, they got to check your assets, things of that nature. Those typically take anywhere from about 15 to 30 days, most likely 30 days. If you're using a down payment assistance program, whether it's a grant or a silent second mortgage, and you have to go to this person who's giving you the grant or the silent second mortgage and show them documents before they close, it can extend your closing period. So as you're house hunting and you're competing with other buyers who are not using down payment assistance, most likely they're going to probably choose the person who's not using down payment assistance because their closing timeline is quicker than yours. So if you're competing with somebody who's saying, yeah, we can close in 15 days, please accept our offer. And they're like, hold on, I have someone else who just made an offer and it's you, and you're using a grant or some sort of a down payment assistance program, and they see that your realtor put in there, if your realtor knows what they're doing, they put 45 days for closing, they're probably not going to work with you. Not because of the down payment assistance, because they don't care how they get paid, but it's the time, it's a closing time frame. Also, just something to keep on the side when it comes to little side notes. Sometimes listing agents do also think that your file is riskier if you're using down payment assistance. So besides the closing time period that I just mentioned, sometimes listing agents, when they're picking buyers for their listing and they're helping the sellers decide which buyer is the most healthiest, they look at also your down payment assistance as a red flag. And a listing agent's job is to minimize the stress as much as it is. They want their sellers to get top dollar, but they also want the seller to not waste any time when dealing with the buyer. So sometimes it happens a lot in our industry where a buyer's offer gets accepted and somewhere in the middle of the transaction, the deal fell through because the loan officer didn't do their proper due diligence, so to speak, or the buyer, just something happened with the buyer's financing. The listing agent's job is to also help the seller decide which one of these buyers are not going to be a waste of time. So most likely, I'm not sure if it's legal to do it or not, but I'm sure it happens behind closed doors or not behind closed doors, but it happens where they'll tell the seller, hey, look, this guy is not using any down payment assistance. They have proof of funds and they can close a lot quicker. It might be better to go with this other guy than the person with the grant. Now, again, I'm not against grants at all, but this is the raw truth that a lot of people aren't going to show you. There's a lot of sales and different gimmicks when it comes to mortgages and real estate. I'm just giving you the raw cut fact truths. So just to recap, your file's a little bit more riskier. Interest rates most likely going to be a little higher. Now that's not written in stone, but that's most likely the situation because you're using down payment assistance. Also, your closing times are most likely going to be not as quick as regular. So the bank looks at you as a little bit more risky. The sellers look at you as a little bit more risky as well. And also these grants, not your grant, but your grant's going to probably require you to live in the property for a certain time. And if your down payment assistance is a silent second mortgage, then that has to be paid back at some point, whether you sell, refinance, or move out of the property. These are things you have to prepare for. A big part of home ownership is preparing for the worst case scenarios. Home ownership comes with a lot of things. It takes money to own real estate, which brings me back to my first point. Before you even buy real estate, if you're self-employed, you need your business to cash flow. I would love for you to contact me and say, hey, Gio, I'm ready to buy right now, and we close you and I get paid. But it's not about that. It's about giving you the raw truth so that you can be in the best position, so that your kids can have legacy, so that your grandkids have legacy as well. The scripture says that a wise man leaves an inheritance to his children and his children's children. It's about you guys, man. I'm just really trying to be here to give you guys the best info possible. If you're self-employed and your business is doing pretty average, you're making 50, 60, 70 grand a year or whatever, and you're renting and you're like, maybe I should buy real estate now, chill. Get your business up, man. Get your business up. Keep on investing in your business. Get an assistant. Get more products or whatever it is. Spend money on advertising. All those thousands of dollars should be going into your business. I said it. I would love for you to contact me and say, hey, Gio, I'm ready to buy. I'll close you. I'll get paid. But what's going to happen to the longevity of you and your real estate and your legacy? Real estate takes money. What's going to happen after you close and something was discovered in the property where now, yeah, even though you did an inspection, the inspector didn't catch that the plumbing or the something on the roof as far as your flashing wasn't done properly because that's something underneath that they can't see, and now you got to spend $5,000 right after closing on new flashing for your roof. Once you own real estate, that's your problem. That's your problem. Once you own real estate, it can either make you or break you. I want you to think of your real estate as like credit cards. You use them right, it can serve you well. It can give you a good credit score. It can make your personal economy a lot better. But if you use credit cards wrong, it can put you in some heavy debt. That's just what it is. So if you're gonna start buying real estate, make sure you're self-employed. Make sure your business is at a point where that backbone is strong. Because if you're gonna carry that bar, you want your back to be straight as you squat. Squatting is very good for you, but if you do it wrong, it can mess you up. That's just like owning real estate. And if you're climbing the corporate ladder, get in a position that you want to be. If you're climbing a corporate ladder, guess what? One thing people aren't going to tell you about, I just made a video about this yesterday. You think if you own real estate, your monthly payments aren't going to change. Whoever's promoting this is lying. If when you pay a mortgage, you pay your principal, your interest, your taxes, and your insurance. Even though your interest and your principal is locked and it's not moving, anything can happen with your escrow account, which is those taxes and insurance. It might not go up by a lot, or it will probably go up by a lot. But there's times where that changes, especially if you're here in Florida, where insurances are changing and now your premium is more than when you first close. 1 year passes and your taxes go up, and you get a letter in the mail saying, hey, yeah, your monthly payment, in order for us to keep up with your escrow account, your monthly payment, we're going to increase it by $200, so at the end of the year, we'll have enough to pay your taxes and insurance. Because at the pace we're going right now, we're not going to have enough. And so your monthly payment goes up $200, and you're like, what am I going to do now? Because you're not at that position yet. You're still bagging at the supermarket, and you haven't become that manager yet. Get to those positions, because real estate takes money. That's something a lot of people aren't going to tell you, but I'm here to tell you. If you're self-employed, get that business up. If you absolutely need the down payment assistance, speak with somebody who's going to give you the right information. Just don't go to anybody that's saying, hey, yeah, there's programs out there that give down payment assistance. You should hop on it right now. That doesn't make any sense. If you're at a point where you can't save correctly, if you're at a point where you're living check to check, don't let anybody convince you to start buying some real estate. But that's my take on down payment assistance. Down payment assistance is good, but if you absolutely need it, you probably shouldn't be buying real estate. You should be growing personally. You should be climbing that corporate ladder. You should be building up your business, because all of this is going to be financed with your work. That's just what it is at the beginning. It's going to be financed by your work. You want to make sure that you're at a position in your career, whether you're climbing the ladder or you're self-employed trying to build your business. You want to make sure those things are on point. Keep building yourself keep building yourself personally before you hop into some real estate. Now, that's my take. I hope you guys find this information of value. If there's anything that I missed out on down payment assistance, I hope that I can remember and probably add it in here. I probably won't. It's the Mortgage King, guys. I'm out of here. I hope you find this information of value and it takes you to new heights. God bless.